TSMC's Silicon Throne, widening the gap in the chip wars. Welcome back, listeners, to another deep dive into the stories shaping our world. Today, we're stepping into the high-stakes arena of semiconductor manufacturing, a field that might not sound sexy at first, but trust me, it's the backbone of everything from your smartphone to the AI systems driving tomorrow's innovations. At the heart of this story is Taiwan's Semiconductor Manufacturing Company, or TSMC, which has just widened its lead over Samsung Electronics in the global chip foundry market. This isn't just a corporate rivalry. It's a saga of technological dominance, geopolitical chess, and the future of artificial intelligence. So grab your coffee, settle in, and let's unpack why this matters to you, whether you're an investor, a tech enthusiast, or just curious about the forces powering our digital age. First, let's set the stage. Semiconductors are the tiny silicon chips that act as the brains behind every piece of modern tech. Think of them as the foundation of our digital lives, powering everything from iPhones to data centers to electric vehicles. But here's the twist. Most of the big tech names, like Apple or Nvidia, don't actually make these chips themselves. They design them, sure, but the manufacturing is outsourced to specialized companies called foundries. That's where TSMC and Samsung come in. These are the heavyweights who turn designs into reality, etching microscopic circuits onto wafers of silicon in factories that cost billions, yes, billions, to build. A single cutting-edge fab can set you back $20 to $30 billion, making this one of the most capital-intensive industries on the planet. Only a handful of players can even afford to compete, and right now, TSMC is wearing the crown. According to the latest industry reports, TSMC controls over 60% of the global foundry market. Samsung, its nearest rival, is lagging behind with just 10 to 15%. That's a staggering gap, and it's been growing. Why? Well, TSMC has mastered the art of producing the most advanced chips. Think 3nm and soon 2nm processes, which pack more power into smaller spaces than ever before. These are the chips that tech giants crave, especially as artificial intelligence becomes the hottest game in town. NVIDIA's AI GPUs, Apple's latest processors, and custom chips for cloud computing giants. They're all largely made by TSMC. When demand for AI skyrockets, as it has been, TSMC reaps the rewards. It's not just about having the tech. It's about being the trusted partner for the world's biggest innovators. And that trust, paired with technical prowess, is turning into a self-reinforcing cycle of dominance. Now let's talk about Samsung for a moment. This isn't some underdog startup. Samsung Electronics is a global titan, churning out everything from smartphones to memory chips. Yet in the foundry space, they're struggling to keep pace. One big issue is yield rates, basically the percentage of chips on a wafer that actually work. Lower yields mean higher costs and unhappy customers. And word on the street is that Samsung's yields on advanced nodes haven't matched TSMC's. Then there's the trust factor. TSMC is a pure play foundry, meaning it doesn't design its own chips to compete with clients. Samsung, on the other hand, makes its own processors, which can make some customers nervous about sharing sensitive designs with a potential rival. It's a perception problem as much as a technical one, and it's cost Samsung dearly in building the kind of deep relationships TSMC enjoys. But there's more to TSMC's lead than just tech and trust. Let's zoom out and look at the sheer scale of their investment. TSMC pours tens of billions of dollars every year into new equipment, cutting-edge lithography machines, and sprawling fabrication plants. This isn't just spending, it's building a moat, a barrier so high that competitors can barely dream of crossing it. The cost of entry in this industry is astronomical, and TSMC has spent decades fortifying its position. Once you're ahead, the revenue from big clients fuels more investment, which fuels more innovation, and the cycle continues. For Samsung or even Intel, which is trying to muscle into the foundry game, catching up feels like trying to sprint up a mountain while TSMC is already at the summit, building an even taller peak. And here's where the story gets juicier. Semiconductors aren't just a business, they're a geopolitical lightning rod. TSMC is based in Taiwan, a place that sits at the heart of global tensions. These chips aren't just tech. They're critical to national security, military tech, and economic power. That's why governments worldwide are racing to secure their own supply chains. The U.S. has the CHIPS and Science Act, funneling billions into domestic production. Europe and Japan are making similar moves. TSMC itself is building new plants in the U.S. and Japan to diversify its footprint. But let's be real. Taiwan remains the epicenter of advanced chip making. If anything disrupts operations there, the ripple effects would be felt globally. For investors, this concentration is both a golden opportunity and a glaring risk. TSMC's dominance gives it pricing power and strategic clout, but it also means the world's tech economy is precariously tied to one company and one politically sensitive spot. So what does this widening gap between TSMC and Samsung mean for the rest of us? If you're an investor, it's a reminder that technological leadership in semiconductors is everything. The companies that can make the smallest, fastest chips attract the best customers, which drives revenue and funds more R&D. It's a virtuous cycle for TSMC right now. Then there's the AI boom. Every neural network, every machine learning model needs cutting-edge chips, and TSMC is the go-to manufacturer. This isn't a short-term trend. It's a structural shift that could underpin TSMC's growth for years. But don't ignore the risks. The capital intensity of this business means only the deepest pockets survive, and geopolitical shocks could upend everything overnight. It's a high-reward, high-stakes play. Looking ahead, the foundry market isn't going to get any less competitive. Samsung isn't throwing in the towel. They're investing heavily to improve yields and win over clients. Intel, too, is pushing hard with its foundry services division, hoping to challenge the status quo. But TSMC's advantages are structural. Decades of expertise, a vast supplier ecosystem, tight-knit relationships with chip designers, and a head start in the most advanced manufacturing processes. Catching up isn't just about money. It's about time, trust, and technological know-how. For now, TSMC looks like it's not just leading the race. It's redefining the track. Let's wrap this up with the bigger picture. Semiconductors are the foundation of our digital economy. Every leap forward, whether it's AI, cloud computing, or autonomous vehicles, depends on more powerful chips. And behind those chips are the foundries, the unsung heroes, or titans, depending on how you look at it, that make innovation possible. TSMC's growing lead over Samsung isn't just a corporate win. It's a signal of where the tech world is headed. AI is turbocharging demand, capital barriers are locking out new players, and geopolitical stakes are turning chip-making into a battleground for global influence. In this environment, the companies that control semiconductor production don't just shape markets, they shape the future. So what's your take? Are you bullish on TSMC's Silicon Throne, or do you see risks on the horizon? I'd love to hear your thoughts. Until next time, keep your eyes on the stories behind the headlines. They're often the ones that matter most. Thanks for tuning in, and I'll catch you in the next episode.